Canada's housing agency just admitted something they have never said so bluntly before. Home prices in BC will fall this year. And the group hit the hardest are Vancouver home sellers and the developers. But there's a lot more to this story. We recently got two separate reports from pretty reputable sources, one from CMHC, the Canadian Housing and Mortgage Corporation, the other one from RBC, the Royal Bank of Canada, and both of them are making their predictions and outlook for the rest of the year and into 2026. I think both reports are very interesting and they offer some great insight into what experts are saying about the Canadian real estate market and where are we likely to end up next year. So first of all, the prices. Both reports are agreeing that the prices are likely to go down. According to the CMHC, the prices are likely to go down 2% by the end of 2025. That's across the whole Canada. However, in Ontario and in British Columbia, the prices are likely to drop even further. And of course, we already see that. If we zoom into Vancouver, the prices have already fallen about 3%. That's according to the Real Estate Board of Greater Vancouver. Now, that is the average price drop. Of course, some segments of the market have been affected even more. If you look at the pre-sale condos, those have been hit even harder. We of course have read many stories and I have done several videos about some people not being able to close on their properties that they bought just a few years ago because the prices have gone down so much that now they need to qualify for a completely different valuation and the appraisals are just not coming in high enough. So it all depends on what type of property you're looking at. The townhouses and some of the housing market is boosting up the rest of the market. If we only isolate condos or if we only isolate detached houses, the prices have dropped even more. And if CMHC is correct, by the end of the year, we're likely to see another 2% price drop, which means we will see close to 5% price drop through the whole 2025. That's a pretty big price drop in general, but that's according to the CMHC. According to RBC, we're likely to see prices going down into 2026. That's where the two reports kind of differ. For CMHC, they're predicting that 2026 will be a balancing year. We're going to start seeing more activity come back to the market and the prices will stabilize. According to RBC's report, we will see some activity return to the market because there's a lot of pent-up demand. In other words, because we had a very slow market in the last few years, a lot of buyers were waiting to make their purchases. And now in 2026, a lot of them will be returning back into the market or entering the market for the first time. And we will see more activity. However, according to them, the prices will drop even further in 2026, especially in Ontario and in BC, more specifically in big markets like Vancouver and Toronto, and again, all due to the pre-construction condo crisis that we're currently experiencing. Now, before we go farther with more of the report, I do need to note that we should take all of these predictions with a grain of salt because these are, of course, just predictions. Nobody can tell you exactly what's going to happen with the market moving forward. For instance, CMHC at the beginning of pandemic was predicting that the market will drop by 18%, the demand and the prices. However, we all know how that turned out. The market exploded, the prices skyrocketed, and we had more transactions than ever. So even though these reports might not turn out to be accurate, I still think there's a lot of value in reading them, in understanding them, because you can see what experts are thinking and where the general market and the economy is headed. Now, in terms of the housing affordability, unfortunately, even with a huge drop, let's say 5%, or if we have a massive drop, 10% of price drop for 2025 and 2026, which would be a very significant price drop. I know a lot of people will say in the comments, oh, 10% is nothing, but 10% of your home value being lost in a couple of years, that's quite a bit. But even with such extreme price drops, the affordability, unfortunately, will still remain out of reach for majority of people. Currently, there's a very high level of inventory on the market. There are a lot of choices for the buyers, but not everyone can take advantage of these choices because the prices are still out of reach for majority of people. And they will remain out of reach, unfortunately, because of mortgage rates. It's not only the prices, but it's also your monthly payments. The higher the interest rates are, the harder it is to qualify for a higher mortgage. And of course, the higher your mortgage payments will be. Now, the variable rate prediction is we might see one more cut before the end of the year. Again, this is just a prediction, but even a 0.25% cut is not going to do much to the overall affordability. Currently, the overnight lending rate is at 2.75%. Perhaps it will go down to 2.5%. It's not a huge difference. It's not enough to really swing the pendulum the other way and give buyers more purchasing power. At the moment, it's not going to do much. It's a drop in a bucket. On top of that, the experts are also predicting, both CMHC and RBC, that the fixed interest rates are actually likely to go up, which is a bit surprising. You would assume that if the variable rates are going down, the fixed rates would also go down. But of course, those two are tied to completely different things. The variable rates are tied to the overnight lending rate, and the fixed rate is tied to the bonds market. And currently, the experts are predicting that the fixed rate is likely to go up. Now, is it going to go up a crazy amount? Is it going to go up a little bit? Nobody knows, but currently the feeling is that it's not going to go up by an extreme amount, but it will be higher. So that could create a little bit more uncertainty in the housing market. There are a few more key takeaways from these reports. Number one, the fact that the rental rates are likely to go down even more. Currently, the rental rates have been dropping 10 straight months, especially here in Vancouver. Across Canada, the rental rate has dropped by about 3.7% year over year. However, in Vancouver, the rental price drops are more extreme. For one bedroom apartment, the prices have dropped by about 9.5%. And for a 2-bedroom apartment, the prices have dropped by about 7.1%. Those are some pretty big rental drops. And again, a lot of people will disagree with me. They will say 10% is not a big deal. But if you're a landlord, you are definitely feeling these price drops. And again, this is just one of many. So over the last couple of years, they have been experiencing a lot of downwards pressure on the prices. And now this number is 9.5%, and it's likely to go up even more because, number one, we will see a lot more rental inventory coming to the market, especially here in Vancouver. I did several videos talking about this very fact, but that is coming for sure. We know that we'll see a lot more supply to the rental market, which is good news for a lot of tenants. This is not exactly a bad thing. It's a bad thing if you're a landlord, but if you're a tenant, this is good. And for general housing affordability, this will definitely help. Number two, the lower immigration numbers are definitely taking pressure off of rental prices. I think the statistic is something like for the first 5 to 10 years, majority of new immigrants rent, which is of course not surprising, especially now with the foreign buyers ban. If you don't have your PR, you can't even buy in the first place, even if you have the money. So the newcomers to Canada are a major driving force for the rental demand in Canada, and specifically in cities like Vancouver and Toronto. If you have a much lower number of new immigrants coming, you don't have as much demand for rental units, and of course you have lower rental prices. On top of that, as I mentioned, we will see more supply. If you're a landlord, it's not all doom and gloom. This is just a temporary setback, at least according to a different CMHC report. According to them, in a couple of years, we should reach an equilibrium and the prices for rental units will start going up again as demand builds and as inventory dries up. If you're a tenant, take advantage of these opportunities because they are temporary, and in Vancouver, it is rare that you have the upper hand. If you're a landlord, buckle down, weather the storm, and things should improve for you in the future. The other thing that these reports are talking about is the slowdown in the construction, especially in the multi-unit construction, high rises, low rises, and especially for the resale units. Of course, it makes sense. I said this in many other videos. If you have a slowdown in the resale market, the developers don't want to take many chances. They don't want to take many risks, and they're hitting a pause on a lot of their projects. These projects will eventually come online, but that might take years, which means that in the meantime, we might experience a bit of a shortage. I know it might sound weird saying that we will have a shortage of new construction housing right now when we have a record number of condos sitting empty. Something like 2,000 completed condos are currently sitting vacant, empty in Vancouver. How can we see a shortage in new construction in many years? But that's how the market works. That's how big Vancouver's market has gotten, that probably 2027, 2028, we will start seeing some shortage because less new units will be coming onto the market for sale. The last couple of important predictions that this report talks about are the predictions about the Canadian economy in general. Most experts seem to agree that we will be hitting a mild recession by the end of 2025. The unemployment rate should hit its lowest this fall and start to gradually recover next year and into 2027. The impact of tariffs has not been as devastating to the Canadian economy as a lot of people have feared, but that is so far. Things are developing, things are unpredictable, so who knows what's going to happen in the future. But at the moment, seems like a lot of experts are of a belief that the consumer confidence will return into 2026 as the tariff uncertainty sort of settles down. Perhaps we will reach some sort of an agreement. And again, both the CMHC and RBC are talking about stronger real estate market. They just kind of seem to disagree about the prices. Again, the RBC says that the prices will continue to drop into 2026. The CMHC is talking about a pricing recovery in 2026, but a gradual pricing recovery. So what does that all mean for you as the buyer or the seller? If you're a buyer, this is great news. You have more options, you have higher negotiating power, you have a lot more leverage and less pressure to buy right now. You can take your time looking at properties, choosing the right property, and you also don't have the fear of prices skyrocketing, at least as of right now. If you're a seller, this means you have to be very sharp with your pricing. You can't look at the sale prices from a few years ago and expect the same numbers today, especially in a condo market, especially certain neighborhoods, certain buildings in the condo market. There are still buyers in the market. You will still sell, but it might take a bit longer. I'll do my best to keep you guys updated on this YouTube channel with any changes to the real estate industry, any exciting news. Please subscribe to the channel so you don't miss those videos when they do come out in the future. And if you enjoyed watching this video, please give it a thumbs up. That helps out quite a bit. If you're looking for real estate advice here in Greater Vancouver, my contact information will be below. Please feel free to reach out. Thanks for watching this video, and we'll see you next time.